If you'd been making some moves to your portfolio over the last few months, you would not be alone. And some of the money that is made on all of that trading activity is showing up in the latest numbers from some Wall Street titans. Bank of America came out with their quarterly results, and there's lots to talk about with their bread and butter banking business, but their equity trading revenue was more than $2 billion. For Morgan Stanley, it was more than $3.5 billion. For Goldman Sachs, they set an industry record at more than $4 billion in equity trading in the 3-month period. I want to bring in David Dietze, who's been tracking the financials for many years as Chief Investment Strategist, Dietze Wealth Management Group, to talk a little bit more about the buzz on these latest financial earnings. And look, there's always a lot. They're big companies. They've got lots of different divisions, David, but the trading numbers, I guess not a surprise because it's been a volatile market, but they are mind-blowing.
Absolutely, John. Good to be with you this morning. So, yeah, Goldman Sachs really hit it out of the park this morning, and they're really in the sweet spot of banking activities. Where the strength is that we're seeing here is both in the trading and deal-making activities. Trading, of course, got a real tailwind just because of all the volatility that we've seen the first half. Driven, of course, by the political issues that are affecting the economy. Will there be tariffs? Will there be interest rate cuts? Will Jerome Powell stay in his position? All that has increased the amount of trading the investors are doing that goes right to the bottom line for these banks. The other aspect, of course, is deal making. Deal making was soft really in Q1, but as we saw a little bit of softness in terms of President Trump's resolve to impose harsh tariffs, we saw business confidence start to improve starting around April 8th, and the deal making has continued. That too plays into the hands of an investment bank orientation that Goldman Sachs has, and that's why we're seeing these robust results there.
Okay, and then let's also talk, at least with Bank of America as an example, because they've got a lot of traditional banking business, and certainly with the Canadian banks, we talk about the importance of net interest income, so the amount of money they make between that spread on, what their costs are and what they are borrowing money at. We've talked about how the U.S. economy has been navigating fairly well, that there hasn't been this massive need for the U.S. Federal Reserve to consider interest rate cuts outside of the pressures being felt from the White House. So are we in a bit of a sweet spot then, based on those dynamics, when it comes to, a company like Bank of America generating profit from that?
Well, so, Bank of America did fall short in terms of the revenue estimates. I would say that the net interest income sector for the banks have been steady as she goes to a little bit soft. So here's the thing. The good news, of course, is that consumers have stayed resilient. Business activity, we really haven't seen the effects from the volatility in terms of tariff policy or the risk of recession that some people are forecasting. So business activity stays pretty strong. Consumers, for the most part, are paying back their loans and so forth. On the other hand, of course, we have not seen those cuts from the Federal Reserve in terms of interest rates because they're looking to see what the outlook is given the change in tariff policy. Will that drive inflation up? Will that keep interest rates up? So as a result, that net interest margin is being squeezed. There's a lot of competition from the money market funds. There's a lot of competition from higher than what we've seen in the past, short-dated treasuries and other high-quality instruments. And so therefore, they haven't been able to reduce the amount they're paying on deposits. They haven't really been a big surge in terms of what they're charging. So that net interest margin has been squeezed a little bit.
Before I let you go, and unfortunately we only have about a minute left, David, but I'm looking at the Wall Street views on the big money center banks, Bank of America, Citi, JP Morgan, Wells Fargo, and then if you throw in Goldman and Morgan Stanley, just to have more of a Wall Street feel. Currently, the largest majority of buy ratings are on Bank of America and Citigroup. That might just also be a reflection of, stocks that have had nice runs over the long term, like JP Morgan obviously has been a winner over the long term. Out of all those names, are there any in particular that you as an investor would be gravitating towards?
We like Citi. Citi is still trading below book value, below tangible book value, as opposed to, for example, JP Morgan's trading close to 3 times book value. So it's significantly cheaper. But the fact their price to earnings ratio is about 12 versus JP Morgan 15 to 60. And indeed, over the next couple of years, we're looking at close to 20% growth in earnings, while JP Morgan is close to high single digits. So we think the valuation tailwinds really favor investments in Citigroup. Finally, Jane Fraser seems to be getting the job done. As much as we love Jamie Dimon, the fact of the matter is he may not be there in 5 years because of his age and so forth. And when he steps down, what will people think of JP Morgan at that point? So we would favor Citi over JP Morgan going forward here.
Okay.